Hey everyone, let's jump right into today's explainer because we are unpacking something absolutely massive in the corporate landscape. We're looking at Teledyne Technologies, and man, their historic second quarter 2026 earnings release is something else. If you follow the markets, you know we're in a pretty turbulent global economy right now, right? Yet somehow Teledyne literally just posted the strongest quarter in their entire history. So how did they pull off this unprecedented success when so many other companies are struggling with headwinds? Well, that is exactly what we're going to break down today.
Here's our roadmap for today. 1. A record-breaking quarter. 2. The digital imaging powerhouse. 3. Growth across all segments. 4. Cash flow and balance sheet. And finally 5. Future outlook and risks.
All right, starting with Section 1, a record-breaking quarter, and Teledyne's historic performance. Okay, let's dive into this using a bottom-line upfront approach, because honestly, the headline figures here are just massive. $1.66 billion in net sales for the second quarter of 2026. This isn't just some slight beat, you know? This represents a 9.8% leap compared to the exact same quarter last year. When a company of Teledyne's massive scale increases its top line by nearly 10% year over year, that signals their core markets aren't just stable, they are aggressively expanding.
And as you'll see, those sales translated directly into profitability. Hitting $6.28 in non-GAAP diluted earnings per share, that represents a staggering 20.8% increase from the previous year. It really shows us that Teledyne didn't just sell more stuff, they sold it way more efficiently. Basically, their operating margin expanded from 22.2% last year to a really robust 23.4% this quarter.
To put a human voice to all this data, we really have to look at the words of Teledyne's executive chairman, Robert Marabán. He stated, quite simply, "This morning we were pleased to announce the strongest quarterly orders, sales, and operating profit in the company's history." I mean, that right there is the sound of undeniable corporate triumph. But we don't just stop at the macro-level wins. We need to know exactly why this happened.
Which brings us to Section 2, the digital imaging powerhouse, the absolute MVP of Q2 2026.
Lowering the microscope a bit, we find our primary catalyst, the digital imaging segment. So what's actually driving the surge here? Honestly, it kind of sounds like the inventory list for a spy movie. We're talking sophisticated systems for space, airborne platforms, and unmanned marine systems, so yeah, essentially drone submarines. They also noted considerable increases in counter-unmanned applications, surveillance, and high-tech industrial X-ray products. The organic growth in this division was simply incredible.
The sheer scale of this jump is literally staggering. Just look at this. In Q2 2025, operating income for digital imaging sat at a respectable $119.6 million. But in Q2 2026, it exploded to $170.2 million. That is an incredible 42.3% jump in operating income for a single segment, fueled by higher net sales, a really favorable product mix, and actually even some tariff refunds. Digital imaging is undeniably the clear star of the show this quarter.
Okay, moving right along to Section 3, growth across all segments, or really, the anatomy of a win.
Because look, a truly resilient company doesn't just rely on one star player, right? Across the rest of the board, the success wasn't isolated at all. Every single other segment grew. Instrumentation pulled in $387.8 million, up 5.5%, driven by stronger offshore energy and marine defense markets. Aerospace and defense electronics hit $286.4 million, which is a solid 8.2% increase, fueled heavily by defense electronics. And engineered systems reached $119.6 million, an 8.4% climb. This perfectly contrasts that explosive high double-digit growth of digital imaging with the steady, reliable, incremental growth of the broader company. It's just a beautifully diversified foundation.
Which takes us to Section 4. Cash flow and balance sheet, basically our financial health check.
Translating these top-line wins to the foundation of the company, let's talk about debt for a second. At the very beginning of the quarter, Teledyne made a massive $450 million debt maturity payment. This is a major flex of financial strength. I mean, when a company can comfortably wipe nearly $500 million of gross debt off its books while simultaneously posting record profits, you know for sure their operational engine is generating some serious cash.
And here is the real so what factor for you. By the end of the quarter, Teledyne's consolidated leverage ratio sat at a very low 1.1x. They generated $315.2 million in operating cash, leaving them with $284.7 million in pure free cash flow. This means they have an incredibly clean balance sheet and a lot of cash on hand. As management noted, given this financial strength, they are actively positioned to review a number of new acquisitions. They aren't just sitting on this cash, they are loading the weapon for future inorganic growth.
Next up, Section 5, Future Outlook and Risks, looking ahead to the horizon.
So what about that horizon? Let's juxtapose their internal optimism with the external reality. First, the optimism. Teledyne ended the quarter with a staggering $5.0 billion in funded backlog. Because of this massive pipeline of secured work, management actually had the confidence to significantly raise their full-year guidance. The non-GAAP earnings per share outlook was bumped up from a prior high of $24.15 to a new high of $24.65. They are essentially telling the market, hey, we expect this momentum to continue.
However, to maintain a neutral and complete view of the source material, we absolutely must look at the forward-looking risks the company explicitly filed. Teledyne operates in a really complex world, and they flagged some severe macroeconomic and geopolitical disruptions. These include the impacts of the 2026 conflict between the US and Iran, which they note could strain energy and shipping, as well as supply shortages for critical materials like aluminum and industrial helium. They also highlight escalating economic tensions and new tariffs between the US and China, alongside the potential ripple effects of lower aircraft production rates at Boeing or Airbus on their commercial aerospace businesses.
Which brings us to the ultimate question we are left with today. Teledyne has clearly built an impenetrable fortress of a balance sheet fueled by unprecedented demand in their digital imaging and defense sectors. But can their record-breaking momentum and massive cash reserves outpace the escalating, unpredictable geopolitical disruptions of late 2026? It's a fascinating tension between corporate execution and global uncertainty, and it's for sure something everyone should be watching closely as we head into the next quarter. Thank you so much for joining me for this explainer, and keep learning.